Hi everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of your favorite companies. And let me tell you, this latest filing from our friends at Nuveen Churchill Private Capital Income Fund is quite the read, especially the part about how they plan to make money with all these different share classes, almost like a financial chameleon. So what's the big story here? Nuveen Churchill is essentially a wealth-generating machine, but they're not selling us stocks in the traditional sense. They're talking about shares in a fund that's all about lending money to middle-market companies. Think of them as a financier for businesses that are too big for small loans, but too small for the giants of Wall Street. They're aiming for income and then some appreciation, and they're doing it through 3 different types of shares: Class S, Class D, and Class I, each with its own fee structure. Let's dive right into the numbers because that's where the real juicy details are. Looking at their financial highlights for the 3 months ending March 31, 2025, things are really starting to move. Their total investment income jumped significantly from $16.21 in the first quarter of 2024 to $42.6 million in the first quarter of 2025. That's a massive leap, more than doubling their income. What's driving this? Well, it's mostly because they're putting more money to work. Their portfolio size ballooned from $633 million earned in early 2024 to $1.8 billion by March 2025. That's a massive leap, more than doubling their income. What's driving this? Well, it's mostly because they're putting more money to work. Their portfolio size ballooned from $633 million in early 2024 to $120 billion by March 2025. That's a huge increase in how much capital they're managing. Got to now, all that activity comes with costs, and we see that clearly when we look at their expenses. Interest and debt financing expenses shot up from $3 million in early 2024 to $14.25. This reflects their increased borrowing to fund those investments. Essentially, they're borrowing more money to make more loans, which is how these funds often amplify returns, but it also manages those interest expenses. When we look at the actual profitability, the net investment income for these 3 months shows a similar trend, going from $12.55 BRL this year. That's a good sign, showing that the increased investments are indeed generating more income. But here's where the Buffett-style analysis comes in. We're not just looking at income, we're looking at the expense ratio. Notice the difference between net expenses before and after expense support and waived fees. For Class I shares, this ratio improved from 4.52% in the prior period to 9.00% after considering waivers and support. This indicates that while the underlying expenses are high, the waivers and support are helping to bring them down to a more manageable level for investors, though it's important to keep an eye on how long that support lasts. Now, let's talk about what they actually invested in. The schedule of investments gives us a snapshot of their portfolio's breakdown. As of March 31, 2025, the vast majority of their investments, over 92%, were in first-line debt. This is generally considered the safest type of debt as it's typically backed by collateral line, but then we also get a peek into their industry exposure. The biggest chunk of their portfolio, about 14.27%, is in healthcare and pharmaceuticals. This is a sector that's always evolving, but can also be seen as a defensive play. What's interesting is their portfolio turnover rate. For all share classes, it's sitting at a rather low 3.67%. This suggests a more long-term buy and hold strategy, which aligns with their focus on private debt and equity investments. They're not actively trading in and out of positions frequently. Now, let's look at their borrowings. As a BDC, they can use leverage, and they are. As of March 31, 2025, they had $360 million borrowed under their Bank of America credit facility. They also have a Scotiabank credit facility and a CLO facility, showing they're using quite a bit of debt to leverage their investments. The risk factors section is always a crucial part of these filings, and Nuveen Churchill doesn't hold back. They're upfront with investors. They highlight the risk of price declines and illiquidity in the corporate debt markets. This means if they need to sell assets quickly, they might not get the price they expect, impacting their net asset value. They admit they use leverage, which magnifies both potential gains and losses. This is a critical point for any investor to understand. Leverage can supercharge returns, but it also amplifies downturns. This is a really important disclosure. It means that some of their distributions might be coming from money. The advisor is essentially lending to the fund, which then needs to be paid back later, reducing future distributions. It's crucial for investors to understand that current distributions aren't solely based on investment performance and might include borrowed money or these temporary waivers. Looking at the ownership table, it's clear that TIAA, the ultimate parent of Nuveen, is a major shareholder, which can be a sign of stability and long-term commitment. TIAA holds a significant number of Class I shares, showing a substantial investment from the parent company itself. In my take on Nuveen Churchill, they're playing in a specific niche, financing middle market private companies. Their strategy seems solid, leveraging Churchill's expertise and Nuveen's scale. The financial numbers, particularly the growth in investment income, are impressive, but the reliance on leverage and the significant fee structure are definitely points to watch. As with any investment, especially in private markets, understanding the risks, particularly around illiquidity and potential valuation uncertainties, is key. They're being transparent about that, which is a good sign. The long-term outlook seems promising if they can continue to deploy capital effectively and manage those risks. That's our deep dive into Nuveen Churchill Private Capital Income Fund's latest filing. What are your thoughts on their strategy and fee structure? Drop a comment below. If you found this analysis helpful, give this video a like and subscribe for more corporate breakdowns. And hey, join our community on Discord, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you next time on Corporate Decoder.